Hey friends, thanks for joining me, Jim Barud, to hear a few insights from leaders who represent our innovation ecosystem. Today's chat is with Joanne Lynn, principal at Newark Venture Partners, and Rudy Valli, angel investor at Jumpstart Angels. Joanne, tell us about yourself and where you work.
Yeah, absolutely. Thanks for having me, Jim. And it's really great to be able to share the panel with Rudy as well. So hi, everyone. Happy Wednesday. My name is Joanne Lynn. I'm a principal at Newark Venture Partners. We're an early stage technology venture fund focused mostly on B2B software investing. And we are headquartered right here in Newark, New Jersey. Fund really started about 5 years ago now. We're operating out of our second fund vehicle, really focused on seed and seed extension kind of stage companies, potentially some small A's and some, on the other end, potentially some pre-seed companies. And we are focused right now on investing in a few active investment theses, one of which is health tech. I actually lead our health tech investment thesis. I know there are a lot of health tech founders out there, especially in New Jersey. We're also going deep in supply chain and logistics. So as we continue to talk about, the aftermath of 2020 and what that means, I think that's an interesting area that we've really been active in. And then also the space of sort of new media and audio. So that's a little bit about the fund. We have large corporate LP partners, the strategic partners within our fund, including Audible, Panasonic, RWJ, Barnard, Horizon Blue Cross Blue Shield of New Jersey, Dun & Bradstreet, and NJEDA is also part of our LP base. So great connections to the greater Newark community and the large enterprises there. Myself, I've been in the venture scene for about 6 years now, co-founded a company, also based in Newark, spent time on Wall Street and as a teacher through TeachForAmerica, so a very windy road to get to where I am today.
Thank you, Joanne. Rudy, go ahead.
Yeah, folks, good afternoon. I'm also pleased to be joined with Joanne and Jim. I'm a Jersey boy, been a Jerseyite all my life, went to school locally in Montclair State, started my career with IBM, and after spending some time with IBM, I got my first entrepreneurial start with joining a company that had joined about 2 or 3 years earlier. And it was my most fun experience in that I had 3 rules. I didn't do anything illegal, unethical, or unprofitable. And within those 3 rules, we did whatever we needed to do to win the business, which was a great foundation from IBM and then the flexibility of an entrepreneurial company. Then I moved to Ernst & Young, developing a sales culture within their audit and tax practice, and then evolved to management consulting. My last corporate job was with what was then Anderson Consulting, became Accenture. Retired from them about 18 years ago, started my own consulting firm and some entrepreneurial businesses, one of which was in Rio de Janeiro. And that my wife asked me, what do you enjoy doing? And I said, international travel. So she said, set up a business that involves that. And okay. And so every quarter I was going to a different part of Rio and really enjoyed that experience. Today, what's relevant for our conversation is I'm a member of the New Jersey Jumpstart Angel Group and making investments through that vehicle as well as some of my own personal investments in Brazil. I'm also a football official, a lacrosse official, and teach entrepreneurial finance at Fairleigh Dickinson.
Thank you, Rudy. Well, you guys bring a lot of experience in different areas. So thanks for being here today. So tell us, we've just gone through past pandemic year, which has been sort of very challenging for everyone, including entrepreneurs. How are you seeing the entrepreneurs that you're dealing with? Let's just take us through a year ago until today and, maybe talk about how things are looking post-pandemic as we come out of this eventually in the near future. So Joanne, give us your take on on how you're seeing the startup and entrepreneurial community.
Yeah, I think it's been an interesting 12 months, to say the least, in at least the institutional venture capital world, right? There's a report that comes out, the NVCA Venture Monitor report, that kind of goes over activity over 12 months in the last few quarters. And so it was really interesting to see the trends coming out of 2020, where, VC activity really didn't slow down at all of the overall, right? At the outset, in April and May, we could talk from experience as a fund, there was a lot of hesitation. There was concern around shifting an entire industry that used to be very reliant on in-person meetings, especially at the seed stage, where you really want to get to know the founders because there's not that much traction to go off of, to try to continue to do diligence and invest in companies on a remote only and kind of Zoom only environment. So there was a lot of hesitation. I would say maybe there was a pause in the April and May phase, and maybe you start to see some hesitation from investors. But really, I think come third quarter and fourth quarter, there was a realization that this is going to be the norm for a while. And, funds really had to just continue to deploy capital. And we got used to doing diligence via Zoom. Deals continued to close. So it was pretty interesting to see that. And even at the early stage, deal count, I think, was fairly comparable to 2019. Round sizes actually increased, and then average valuations were pretty stable. I think they decreased a little bit, but so that's, I think, at a macro level, really interesting. And then you kind of compare that to what anecdotally our founders experience, or even just in the founder community. There's I think, a little bit of a dichotomy that happened, right? So a lot of super early stage founders, and I'd be curious to get Rudy's take on this, but a lot of pre-seed and angel round founders really struggled because a lot of the activity was probably insider-led round. So you don't already have existing investors. It's really hard to kind of drum up the right network, especially when, again, things are digital only. So I think there was a struggle for folks that don't already have a strong network. And that makes it really difficult, especially when you're hearing about, oh, there's all this money flowing in venture still. And I think it makes the founder experience particularly frustrating in those cases.
Great. Thank you, Joanne. Rudy, how about you?
Yeah, well, certainly I share Joanne's assessment. I think it's safe to continue to say that entrepreneurial ventures and startups are still suffering. In the early part of the pandemic, from an angel perspective, I and my colleagues stopped looking at brand new ventures. We were very concerned about our existing investments. Those entrepreneurial startups, from the standpoint of having now zero revenue coming in for a lot of them, cash flow really suffered. So we were particularly concerned about the existing entrepreneurial companies we had under investment, for them to continue to survive. I think after about 3 months, we felt that had stabilized. The good ones figured it out, tightened their belts and or pivoted in directions to gain some cash flow. And we went back to the community of early startups. And I think from the perspective of an investor, and I hate to say this in one respect, we're doing okay. I mean, we found our personal net worths rising and so forth. So we were still eager to invest in opportunities that made sense. And, you had the dichotomy where you had these startups really having cash flow kind of issues. But for those organizations who knew how to manage cash flow and had a good story to tell, we were still eager to listen. And the experience of Zoom and virtual meetings, it's really increased the activity for us, and that we have meetings once a month that we typically see about 3 new entrepreneurial ventures. And when we were meeting physically, certain members couldn't come, because of just different business needs. Now that we're meeting virtually, we have greater level of activity, greater membership participation. And interestingly enough, we're also collaborating with other angel groups. So we have a greater pool of resources, if you will, to offer the entrepreneurial environment.
Great. So, so that's hopeful, right? That the investing has gone on, and those anecdotal signs are good as far as the level of activity, in addition to some of the stats. So, for the funding locally, what you're seeing, let's just talk about, we already mentioned what's happened during the pandemic. How are you seeing things change going forward? Are we optimistic? Will there be more opportunities? Are we concerned about pipeline issues or funding sort of levels or sorry, valuation levels that are maybe too exuberant? So what are we seeing now in the marketplace, Joanne?
Yeah, I'm not seeing activity slow down, right? I think, especially as we, as a society, are kind of positioning ourselves as coming out of the pandemic now, and there's light at the end of the tunnel. I don't see any reason why. I think investment activity is going to slow down. Pipeline is definitely not slowed down. We think it's definitely ramped up. And as Rudy said, there's definitely advantage to being remote only, because you can schedule back to back pitch meetings. And there are plenty of founders that are coming to the market. I think for our entrepreneurs out there, that just also means there's a lot of noise in the market, right? So there's a lot of competition for the dollars that are out there. And unfortunately, I think one trend that we have seen is that investors, to some extent, have been flocking to what they know and what they're comfortable with, and to some extent, so there's like more pattern recognition type of investing, and first-time founders or underrepresented founders are not seeing as much, I guess, attention from investors. So. Unfortunately, in the second half of 2020, I think venture dollars towards female founders actually decreased for the first time in 3 years. And especially as we're talking so much about diversity in the VC ecosystem, that's disappointing to see. So I'm hoping that, we move out of that in the sort of the midterm, when investors start to feel, again, more comfortable with where we are, and that we're moving out of a pandemic state.
Okay. Rudy?
Yeah, I just want to kind of circle back and acknowledge that, those entities who were like pre-launch, they've really seen their dreams kind of delayed, at least in the first half of the pandemic. Because I know from my perspective and my colleagues, we were reluctant to invest in something brandy new that we couldn't get our arms around. As we've gotten more comfortable with the new environment of how we do due diligence and so forth, I would characterize our mood right now as cautiously optimistic. We do see, the pipeline steady. We are beginning now to talk to brand new entities who have new ideas. And I think from our perspective, we're open to any opportunity that makes sense. So I say and emphasize that's changed in the last 6 months. So for those organizations who had their dreams delayed, I think the come on in sign is open now.
Yeah.
And the entrepreneur founders need to be very adept at communicating in a kind of a Zoom environment. Personally, I don't like it. I rather interact with the founders of, in a physical kind of environment in terms of follow-up and go to their places of business and touch and feel and see. But with that not being in the cards at the moment, you find other ways. And that's a measure of the entrepreneur's creativity in terms of how well can they demonstrate their business idea, their opportunity, their staffing, how well they've pivoted. One of the interesting things we've seen during the COVID pandemic is everybody seems to have an answer for COVID. You know, they've changed their business to fit COVID. And for those where it makes sense, that's fine. For some others, it kind of say, you know, if it doesn't fit, don't push it, because that's a red flag right away.
Yeah.
But as an environment for the short term, medium term, I think I see things returning to quote unquote normal. Just the process by which we make our evaluations and due diligence is currently different.
And I think to piggyback a little bit off of what Rudy mentioned, right? You know, maybe in mid 2020, right, there was a reluctance to look at things that were brand new or pre-launch or just a little bit out there. But as the dust settles and we start to see, you know, macro trends emerge within industries. I mentioned healthcare and supply chain, which I think are two that were dramatically changed because of COVID. I think that creates huge opportunities within those sectors for technology companies to try new things, right? And now investors are, again, reading the tea leaves and understanding where the puck is going. And then they're more comfortable making those investments into brand new ideas, which is how innovation happens, which I think is really exciting. What you will see, and again, to Rudy's other point, is that a lot of companies that maybe were able to raise money because they just like jumped onto a COVID bandwagon and pivoted a product, that I think there's going to be like a graveyard of those companies that start to emerge because they maybe were not able to think long-term enough with their strategy, and that those the tailwinds are going to fall away, don't have sustainable business models. And so companies need to be agile in their strategy as they think about coming out of the pandemic.
Right. So what about this new, I know this is looking into the future, but we have a new $2 trillion plus infrastructure bill that has high hopes of getting through. How does that macro sort of stimulus sort of affect how you see the future, or is that all positive and sort of just provides more confidence levels?
I'll jump in. If
Yeah,
I may.
yeah.
For me, it does increase the confidence that we're coming out of the pandemic, that economic activity is on the rise. Organizations have been stabilized and now I think are positioned to grow. And that kind of filters down to the startup and seed companies if they're smart. And if, you know, I guess the point I would make is we're always going to have challenges, whether it's a recession or a new form of technological competition or regulation changes. And the really good people, the good managers, the good leaders find a way to survive and thrive and take market share. So COVID really kicked everybody in the teeth, but there are some organizations who are really able to take advantage of that. Those are the winners. In the same respect, those organizations who don't have a product or service that lends itself to COVID, they need to be patient. And I think things are coming out of it. I'll give you one example from an investment that I have. I have an organization who developed an app aimed at millennials to help them host parties, schedule parties, invite, collect the money, let people enter at the door, And the application lends itself also to a lot of other events. Well, they went through a couple rounds of angel money. They had a minimally viable product. They were about to launch a whole new marketing campaign with a refreshed offering, and COVID hit. And you can't have parties on campus, right? So what do? So they turned off their existing application and really focused their effort on improving the product and preparing a strategy for when the environment changed. So they had the opportunity to really kind of take hold and say, okay, we really can't position our offering, on a COVID bandwagon, but we are able to survive, monitor our cash, and direct our resources to the right things. So I think those type of organizations are going to do well now that we're coming out of it, because there'll be a pent-up demand for the type of offerings and services that they have.
Got it. And Joanne, how do you see it?
I agree. I do think that that's a general positive, right? It gives confidence that whether it's down to the consumer level, that there's more stability with individuals and their incomes and their personal situations, but also stimulating the economy as how they spend their money, and from an enterprise and business perspective as well. So I do think overall that's a positive.
Great. Now, Rudy, what about Brazil? You mentioned you're keenly aware of the environment there. How does that compare to the U.S.?
Mm-hmm. Well, Brazil right now is having a tough time. I mean, they have a current leader who didn't really focus on COVID as a problem, and I think they're paying the price for it now. They're going to come out of it slower, longer than I think we are in the U.S. However, in the entrepreneurial environment, that community, the cream is still rising to the crop. There are entities that are doing well, and they're getting the investment money. Currently, the way I'm looking at investments in Brazil is I have a organization that manages a portfolio of entities, and I would say a good 75% of them are doing fine. In terms of new opportunities, I'm working with a bunch of guys where we're evaluating new business ventures. One lends itself to crowdsourcing. And if you, it's like in Brazil, the production of cattle, sustainable agriculture and the production of sustainable cattle is a big deal. And we're going to now have the consuming public participate in investing on these cattle ranches. And we're going to make that a international kind of opportunity. So there is still opportunities for creativity, both in the domestic market and a global market, if you think about the macro trends, and to the degree that people in the US and people around the world are interested in sustainability, fair farming and farming and agricultural management practices. And if you have kind of a comparative advantage in that arena, as Brazil does, then there are opportunities around that you can take advantage of.
Wow, that's fascinating. So what about entrepreneurs, right? We mentioned how they've had a rough year. Let's talk about advice we can give entrepreneurs who are just thinking about getting started to those who are in companies that already have funding or some funding. So Joanne, can you comment on what advice in general we can give to entrepreneurs?
Yeah. One piece of advice, I think, so when we talk about entrepreneurs, I think it's a fairly broad category. And a lot of times every entrepreneur gets bucketed into like these conversations, or that pulled into conversations around venture capital funding. I think one thing is important is to make sure that venture capital is the right type of capital for you and your business, because it is a very different ecosystem. And as we mentioned, right, not always the most founder friendly, depending on what's going on in the macro sense. So I think for entrepreneurs to really understand, whether or not venture capital, which can be a time intensive and painful process. Raising venture capital can be a painful process for founders. You have to figure out whether or not that's the right type of capital. There's, as Rudy just mentioned, crowdfunding is a way to raise capital. There's revenue-based financing out there that I think a lot of companies have shown can be really effective for just getting the capital for your business. It really depends. So I think that's one thing that I think is important to delineate, because some people get caught up with all the buzz of venture capital, and it's not necessarily the best choice for every company.
Right. Rudy?
I have three pieces of advice, and it's relevant whether we're coming out of COVID or not. It's first, the entrepreneur founder needs to remain very persistent and enthusiastic. As an investor, I really look for the passion and the enthusiasm that the founder has for the business opportunity. And when faced with questions, tough questions and challenges, you need to be careful not to get defensive. I recognize it's their baby, and if someone's throwing something at their baby, it's tough sometimes. But embrace the no. When someone says no, it's a lot better than not getting any feedback. I remember that from my sales days. I would most rather have someone tell me no, because that's a starting point that I could still continue on. So embrace those no's. I'd also remain focused on cash and cash flow management. It's a critical need and skill that entrepreneurs have to have, whether they have it or if it's on their team. You need to be able to demonstrate bootstrapping and determine the actual cash you need for the milestone or where you are in the evolution of your business. A lot of times when new companies come to the angels, right, they might start out saying, oh, well, we need $500,000. Well, we're not giving anybody $500,000, right? And do you really need $500,000, all right? If you can really determine how much money you need to demonstrate milestones, you have a much greater opportunity to get the funding and also preserve your equity. If the more money you get up front early on in the process, the more percentage of ownership you have to give up in terms of the entity. So you want to manage that risk and reward. And then the last thing I would want to share is that whether it's in yourself or as you're developing your team, you need to have both excellent managers and leaders. And they're not the same. Management is about efficiency, doing things right. Leadership is about effectiveness, doing the right things. And managers cope with complexity by planning, budgeting, organizing and staffing, controlling and problem solving, where leaders cope with change by setting a direction, a vision, motivating and inspiring. So when you're out there, if you find somebody who has both talents, hire them. Because that's something that's a critical success factor for any organization. So those are my three pieces: be persistent and enthusiastic, embrace the no, cash and cash flow management, and have managers and leaders in the organization.
Great. Thanks for that, Rudy. So we're going to get to questions. If anyone has questions, please submit them to the site, to the Q&A prompt, and I'll start pulling those questions. But before we get to questions, I want to ask each of you, you listed a bunch there, Rudy, but if each of you can just share one thing, one tip for entrepreneurs.
Cash is king, and what's in it for them? When you communicate your business opportunity, you have to do it in a way that the investment pitch demonstrates how the business is going to be successful and how the investor is going to win.
Thank you. Joanne?
Yep. I think once you've identified that venture capital is the way you want to go, I think you also have to embrace that fundraising is like a year-round activity. A lot of founders, think that, oh, I'm switching into fundraising mode, when really you have to spend the time to build relationships with investors, keep them posted, even when you're not in market, and that will make the actual fundraising process much easier.
Great. Thank you. All right. So first question is about, how do folks connect with you folks? So we can certainly mention your websites and where they can find you, but in general, why don't we answer it this way? In general, how would you recommend that entrepreneurs reach out to funders or investors? Is there sort of an appropriate or best practices way in general?
So we get a ton of cold emails. I think if you are strategic in making sure that you are writing a personalized cold email, so we know exactly what our active investment theses are. You've identified some connection to a portfolio company of ours. I think that definitely helps. For MVP specifically, we actually run a program called 5 Minutes on the 5th, where my colleague and I, Allison Williams, and I open up our calendars for a few hours once a month, and you can sign up for a short slot, and anybody can sign up for a slot, talk about their pitch, their company, a question about their deck. So look out for those types of opportunities to connect with funds.
Great. And they can, again, just go to your website and find all that information, correct?
You can get our website and sign up for our newsletter. And then every month in the newsletter, there's a link to a sign up for 5 minutes on the.
Great. Thank you. And Rudy?
Yeah, similarly, Jumpstart New Jersey has a website and an application process. I think it's important that the entrepreneur founder looks at the areas that we choose to invest in. There's some things like consumer products. We don't have any talent in our membership to really evaluate that, and we choose not to invest there. But for the industries that we do invest, technology, healthcare, et cetera, we're focused on that. We have an application that's very easy to fill out that kind of gives us a head start in terms of our screening process. If we determine positively that someone meets our objectives, we'll invite them to one of our meetings where they'll present for about 10 minutes, answer questions for about 10 minutes, and then as a group of angel investors, we'll talk about the organization and decide whether we want to follow up right away with extensive due diligence. If we don't, it's not a hard no. It's generally, here are the things that we need to see happen for us to get interested. That assumes someone got through our screening process when we met with them. If we feel an organization's not ready, we also don't want to close the door. What we'll generally do is invite them to what we call Meet the Angels. About once a quarter, we have a session where we'll invite entrepreneur founders who haven't passed our screening yet to just meet us and give us their elevator pitch. And if one of the investors in our group will say, hey, we think we missed something here, they'll appeal to the membership at large and perhaps invite them in. The one other thing I would tell them to take advantage of is we've implemented like an ambassador program. So if we have an organization who's going to present to us, we can guide them on how we would like to see the pitch. What's important to us, what will impress us. Somebody's going to provide them some guidance along the way, because we understand it's a difficult process and different groups evaluate differently. So we want to give you the opportunity to impress us, and we'll help through that ambassador program to do so.
Great, thanks. So someone mentioned, what do you look for in entrepreneurs? Is there one or two characteristics that are really important to you folks?
I'll start. It's a skill I don't have, and that's dealing with ambiguity. The environment changes, COVID happens, competition comes in. To what degree can you demonstrate that you can proceed with your vision, your business idea, your opportunity as things change? Because I'm a controlling type of guy, and I like to predict and plan. And in the entrepreneurial environment, that's very, very difficult to do. So if someone can demonstrate that they're good at dealing with ambiguity, that's a feather in my cap for them.
Great. Thank you. Joanne?
Yeah, I think it ties to exactly what Rudy mentioned, right? But it's also a clear thoughtfulness about all aspects of the business. I think, ideas are sort of a dime a dozen, but you have to demonstrate your ability to execute on it on the near term and short term, but also see a vision for the long term upside for the investor, right? So it's again something that Rudy mentioned earlier. Know who you're speaking to, and what drives a lot of the decision making there is we need to see that there's a big enough market opportunity down the line. So that near-term viability of the business idea, your ability to execute on it, but then also that vision.
Great, thank you. Now, what about folks, entrepreneurs? How do they find business advisors, to help ensure that they are successful? Is there any approach that you two feel is the best way?
So it is. So it's interesting. I think that that's another difficulty coming out of the pandemic, where a lot of times when you're validating your business idea at the early stages, you want to be able to reach out to industry experts or industry veterans to validate it, and then also get their expertise, and you can potentially bring them on as advisors. A lot of times that used to happen more at industry events or entrepreneurial ecosystem events, particularly around New Jersey, and Fairleigh Dickinson has a ton of those as well. And that becomes more difficult. Participating, if there's a chance for you to participate in pitch events, virtual pitch events, I think that's an interesting way to get started in the ecosystem and get to know some of the consultants and advisors that could be interesting to add to your slate. But it is a challenge, I think, particularly as we're moving into more of a digital ecosystem.
Okay.
I can add to that from the standpoint of I share with a lot of entrepreneur founders the need to develop a brain trust. And you have the traditional legal, accounting, finance kind of expertise that you want to have on that brain trust. But as Joanne indicated, people who are associated in the industry. The founder can't be afraid to reach out to these individuals. And a lot of times, and my students will ask me, well, why would someone be motivated to help you? Because you've asked them. I mean, sometimes it's as simple as that, and that one's ego is stroked that you want my advice. So don't be afraid to reach out to people in the industry who might have that expertise. Recognize that in the angel environment, and I would say about half of us in Jumpstart New Jersey, as an example, have an interest to help mentor the entrepreneurial founder. That's part of why we got involved, in that we want to kind of manage the investment by monitoring the activity, the interest of the entrepreneurial founder. So people in the angel environment are generally open to doing that. Not all, but many.
Great. There's a specific question about someone's been using Closing Bench to manage their investments, but this person's interested in other types of platforms or software that investors use. So he asked, what tools do you use or your organizations use to manage investments?
I'll jump in. Jumpstart New Jersey utilizes a tool called ProSeeder. It's really along the lines of identifying, we have a giant funnel of different entrepreneurial ventures in different phases of their growth, whether they're pre-seed or just starting out or a year or two and needing additional funding. So we manage that through an application we call Proceeder. It allows us to see all the information, all of us in the Jumpstart Angel group, to see what information the entrepreneurial founder has supplied, changes, documentation, due diligence, etc. After we've made an investment, I think individuals monitor the success of the investment differently personally, but Proceeder is one of the tools that we use to manage it during the funding process.
Thank you. Joanne?
Yeah, from a technology perspective, we use a CRM system called Copper. So we get a lot of, we have various sources for deal flow, and we input all of that into our Copper CRM. And then for portfolio management, we've been collecting information from our founders via a platform called visible.vc, to help kind of on a quarterly basis get check-ins from all of our companies on the financial health and any business updates.
Great, thank you. And here's a question about entrepreneurial activity in New Jersey and New Jersey-based ventures. I know you guys see stuff from throughout the region, if not outside the region. And how are we feeling about ventures in New Jersey these days?
I think there's been some great recent wins in our local ecosystem of large rounds being raised. So I'm excited about it. And there's within our own portfolio, a lot of great young budding companies that are continuing to grow out of New Jersey, even though, again, we're in a very remote and digital ecosystem now. But I think there's a lot of great activity. So we continue to be excited about it.
Great.
Yeah, I would add that if you can find a way to be in New Jersey, we'd love that as a angel investor, in that the state is providing some incentives from a tax perspective for New Jersey companies, for the investor to get some more favorable tax treatment. And both the New Jersey-based organizations or women or minority-based organizations have some tax credits or ways that we look at the investment that's favorable. So we would love it if you're on the border of New York and New Jersey, come on in.
Absolutely. So what about areas of focus these days? So for those young entrepreneurs or those folks just getting started, are there certain sectors that you two see a lot of potential in going forward?
Yeah, I think I mentioned a few of them earlier, but particularly because we are in Newark, the supply chain and logistics space, I think, is just so ripe for new entrants and technology adoption, and we've really leaned into that over the last 12 to 18 months as a fund, knowing that we have a strategic advantage being in Newark, home of one of the busiest airports, one of the busiest ports, being a rail and road kind of hub of all across the eastern seaboard. So I think there's significant advantage in being a Newark-based founder in the logistics and supply chain space. And I think that the whole debacle with the Evergreen blocking the Suez Canal, you see what the impact is on business, on individuals, on you getting your Amazon package on time, if one thing in the giant cogwheel goes wrong. So I think it's a fascinating space, and we continue to be really interested in it.
Great.
Yeah, I'll just add to that. I mean, you think of like supply chain and logistics and bridges and roads. What's the Biden administration planning to do now, right? The tremendous investment that there's going to be in infrastructure. So if an entrepreneur has the talent and they can figure out, where that money is going to be, that would be obviously an opportunity to take advantage of. I would also say, stay true to yourself. I mean, if you have a passion to be an entrepreneur, what are the skill sets or ideas and opportunities you have that make sense for your talents? Don't try to force it the other way. From a personal perspective, the things that I look for and that members of Jumpstart New Jersey look for are in the technology space, healthcare space, the marriage of technology in healthcare, the marriage of technology in the finance sector. We're interested in the Internet of Things, artificial intelligence. So the mega trends that you hear on the periphery are things that are of interest to us. Personally, things that motivate me in the area of sustainability. So those are, I think if you look at the macro trends, whether it's government investment or where is the cultural interest in terms of healthcare, sustainability, those are things to take advantage of.
Great. Thank you. So this has been great. At the end of every program, I ask for poems or sayings. So I'm going to, ladies first, Joanne, what would you like to share with us?
Yeah, sure. I think there's a Teddy Roosevelt quote that I think captures a lot of the sentiment of what we've talked about across a few of the questions today, and that's keep your eyes on the stars and your feet on the ground. So that's my parting quote for this session.
Great, thank you. And Rudy?
Well, I have to end with a poem, and there was a number of poems that I enjoy relative to persistence, but I knew we didn't have an hour today, so I found one that I've shortened. It's from the Ladder of St. Augustine from Henry Wadsworth Longfellow, and I just have the first stanza and the last stanza that I'll share with you. We have not wings, we cannot soar, but we have feet to scale and climb by slow degrees, by more and more, the cloudy summits of our time. The heights by great men reached and kept were not attained by sudden flight, but they, while their companions slept, were toiling upward in the night. Be persistent.
Great. Thank you, Rudy. And thank you, Joanne. Thanks for joining us. I hope you enjoyed the show. Please like it, leave a review, and subscribe. See you soon.